Hello friends, doing well? I'm Amir Hossein Namavar, and I'm happy to be talking to you. Let's get to the $1.2 million account. When we started these videos, it was less, but now with daily profits, it's reached 1.2 million. And this session, I want to tell you how I was able to make 19,800 profit today and what was my strategy. So you guys can go back test this. Let's review it together. Our mindset was that when a wedge or channel pattern like the one you see in the picture breaks, we would start to long the pullbacks. In which areas? For example, the areas that exist here, that is here, could give us long positions. But we saw that I took short positions here. If we look at the positions, you'll see that here is one of the points where I went short, and we set the stop 4 pips above it. Well, the style I work with is like this. Here, again, I took another short position, and if I show you the stop for this one, you'll see that the stop was really tight, and it gave me a lot of profit. It was even close to 1 pip, almost 9/10, 9 pips, and I took this position with a stop. And for my third position, again with a stop, let me show you the size, with a stop of 3.9 pips. I took 3 positions to the downside and managed to make $19,800 in profit. But how? So we had a broken trend line and we were looking to go long on the pullbacks to these points. But why did we go short? Let's go to the PowerPoint slides so I can show you exactly what happened in the live market. As always, you can see that the account is a real account. And the profits are clearly shown down here as well. $729,000 is the profit on this account so far. The account number is also visible, and you can take a screenshot of these numbers for yourself. If you follow the channel, whenever I make a loss or a profit, I'll definitely share my positions with you. Every day on this YouTube channel, I post my own positions and the setups I've traded on, so you can see where I hit my stop loss so you don't make the same mistake, and where I hit my take profit so you can make that profit for yourself. Now let's get into the lesson. So what exactly happened on the chart? We worked together and said that if a spiky resistance breaks and we see a pattern, which we now want to trade in the opposite direction because it's reversing that major trend that was moving upward. Okay, let's move forward a bit together and see where we would have taken these positions. We said there's an edge area that as a whole can be a suitable zone for us to short. We even mentioned that it could return to break even, and that's where we could short. But what are the actual key points hidden in this specific section where we can take short positions? At this point in time, I cannot answer you using the classic price action style, and to effectively do something like this, I need to take you into the supply and demand approach. Let me explain it to you in much more detail. We have an edge area that extends from this highest point down to the lowest point, which is where the first reaction to the upside occurs. But where exactly are these reversal points, or where are these turning points? The answer lies in the supply and demand method. But in this session, I'm going to take it one step further. That means in addition to supply and demand, we'll also get into liquidity, and you'll understand exactly how today's $19,800 could have been reached. Let's move forward and consider this further. There are certain specific areas that, in the context of supply and demand, we commonly refer to as bases. If you do a little research, you'll see that bases are extremely important zones. There are zones that have thrown us right into the heart of liquidity, or have caused us to break a trend line. And now we have a base around here. These bases usually aren't very big. If you have a 5-minute trend line, you can break a 1-minute or 5-minute base. If you have a 15-minute trend line, then draw a 25-minute base right here for yourself so you can effectively trade the pullback to it. Let me clear and tidy up the chart for you so you can see it more clearly one more time. This large area that I drew here and called a base is actually something that exists in the supply and demand style. And you can trade when the price returns to these bases. For example, if you know styles that are based on liquidity of base levels like ICT, these are called order blocks, and I think many of you have heard this term. I'm saying I know all the styles because I was able to pull out my own style and the M-on style from within all that knowledge, and knowing other styles helped me realize where those styles don't work, so I could use that to create M1, something that does the opposite of everyone else and trades the opposite way. But that's not the topic of this video. Let's move a little further and see exactly what's happening. Where is this coming from? Usually, these come into the heart of some bases, and from there, they drop again. Let's go further and look at an example on the chart. First, draw a support or resistance level broken by strong candles, then draw a channel. You know how to draw this channel, either like this or that, and you know the first time it doesn't work with a good hit rate, so start trading from next times onward. If you draw the trend line accurately, some draw it carelessly like this, you'll see it seems to work well. But the precise trend line to draw here is the one that actually breaks. This trend line doesn't work, it comes down, and again, it doesn't work. Here we hit a stop, and the next one we hit a take profit. Let me clarify this for you and get into today's positions, because today's lesson is really interesting. I make short videos, so if you subscribe to my YouTube channel, you can definitely learn that profitable strategy, backtest it, and make profits for yourself. Look, the trend line that we drew from here and gradually extended ended up like this and created a channel for us. Now, this channel broke here. A very clear and clean example where it returned right into a base that existed up here. Now, what is a base? I'll try to explain it in the next video, but I think you can easily find these things with a little searching, using ChatGPT, Google, whatever you like. But what you can't get that way is the actual trading skill. That's something a skilled trader needs to develop. Someone who has heavy experience trading with large amounts of money. They've traded millions of dollars. They run a hedge fund. They've managed funds professionally. They have a team covering different areas, risk management, even various analysts on their team, so they can provide you with really deep knowledge. For my own personal style, which is called Mon, I have robots for all my trading setups and I don't need to trade manually at all. What really excites me is the trading process itself, because that's where I found myself and that's what I love. I hope it resonates with you too, even when I'm teaching it. Let's move forward. When your trend line breaks here, you have some bases, and you have some order blocks that, as they say, get mitigated here, or it's a first time back. Now, depending on the different styles people know and use, you can take your position here. The stop is here. You can even get to those, I don't know, maybe 10 pip stops. Now, in my own style, my stop is usually 2 or 3 pips. But by using what I'm teaching here, you can get to stops of around 6 or 7 pips, which really increases your reward to risk ratio and can be incredibly effective and profitable for you. And when it breaks here, you can see that we're pulling back to that area, and that's where we start to drop. Let me tell you an important point. We see major trend reversals on higher time frames. But a lot of you have commented to me that you really want to trade on lower time frames. Can you teach us this strategy on lower time frames? And I took that as a sign to teach it to you today on lower time frames. Now let's take a look at a bullish example together. Imagine there's a demand zone, an area of demand, a base down here that we want to react to. Let's look at an example. The first thing we need to do is draw a trend line and use that trend line to observe. This is exactly like the example I traded live today, but this example is really nice. And I actually traded the invalidation of this example today, which is exactly the kind of point you can't find just anywhere. These are the really valuable tips you should note down from the video and backtest. The trend line breaks here. You can see that there are some bases here, or even some bases up here that we'll react to in the future, or these higher zones that we'll react to later and move upwards, or those areas that we'll come back to later. Let's move forward. But I want to teach you some deeper points. When this base doesn't work, and you'll find this everywhere if you search for MTR. But the point I'm about to make from this moment on isn't in those strategies, and you can only get these by blending different styles together. Let me explain it to you. We can use 2 or 3 stops on this strategy. We can certainly use the first one when it returns to break even, or even when it goes back to the higher, more established base. We can also use the second one here, where that particular base doesn't quite work. And exactly where does this truly fit in? Engineer, tell us this. This is exactly like, for example, in the 5-minute time frame or in the 15-minute time frame, there's an order block, a supply zone above this base where the price goes up to and then starts dropping from there. So as soon as you take your first position, which was at break even, this is extremely important. You went short, set your stop here and your take profit here. Now, whether your take profit was hit or your stop was hit and the price reversed upwards, here you can take another short position again. If here is a 5-minute or 15-minute zone and it's a mitigated area that hasn't been touched yet, and this is its very first time back, then right from this precise point you can take short positions by seeing a clearly confirming pin bar or any other setup and confirmation you have for taking short positions, and this particular order block works exceptionally well with a high success rate. Let's continue and see the rest of the process together. If I want to give you an example, this is exactly what I traded today. You can see on the chart that you have a trend line. You expect that it will return to this area here and that we will move higher. It's exactly like what happened today. The stop was hit here and the price moved up from this point. The next long positions are when the trend line you've drawn breaks to the upside, comes down, and then goes to a base in a higher area or a higher time frame. Usually it's about 15 minutes or perhaps 5 minutes that's completely unmitigated, and from there it typically goes up. And this is exactly what I wanted to teach you today. Let me share another example with you. You draw a trend line. Now, the patterns you could have drawn here come down, and you've hit a stop loss down here. Again, when it breaks here, you're about to hit your second stop loss, and these two stop losses cause your account to go into loss. And then you miss the trade where you see the price is dropping afterward. And if I want to tell you more precisely where the price is dropping from, a trend line down here has been broken. There's a pattern here, either a channel or a wedge. And as we go higher, we find an unmitigated area in the higher time frame. Here it's the 1 hour. And from right here, we spot our own entry patterns for the trade and make our entry. And this is exactly what I wanted to teach you in today's session. One more time, so it really sinks in. I'll take you to the chart and show you exactly what I traded on the chart. Let's re-examine. On a higher time frame, the 5-minute chart, we've broken a trend line. If you wanted to take a position based on the break of this trend line and a pullback to those bases, you would have entered around here and set your stop behind this area. Price moved up towards your 1-to-1 reward, but in this zone, it didn't even reach a 1-to-1 reward before dropping. However, the setup I taught today becomes active from this area onward, and you could enter around here. It went up to a 3-to-1 or a 4-to-1 reward. So you can wait and let everyone else take their positions first. Now, whether they hit their 1-to-1 or 2-to-1 reward, or if they get stopped out, this is where you enter, and you can make twice as much money. So for me, it was clear that when we broke this trend line, instead of following everyone looking to go long at these points, I went short, and I got really high rewards. For example, I took my positions here, and you can see with 3 nested positions, I hit a 4-to-1 reward, almost 12 times the reward, very easily. In less than half an hour or an hour, I took it and got out of the market. Yes, I knew that from this point on, we would go long. Why did I know? And what proof do I have to show you that I knew we would go long from there? Because I closed my short positions right down at the bottom. And from the point where I closed my short positions to where we actually hit the lowest lows, it was around 2 pips. Guys, we went just about 2 pips lower. That means I closed my positions right here. We went 2 pips lower. From that point, the price moved up 20 or 30 pips. This shows I knew exactly this was the area where real buyers, those who have learned from me, or even market makers, start placing their positions and go long. From there, the price moved upward, and you could have taken some buy positions from that spot. I also took a really good short position in this area. Since I made my profit, as always, we get up from the market and leave. I'll see you in the next sessions. Don't forget to subscribe. Like the video if you found it useful or if there was something educational in it.